What's going wrong with China's economy? A question echoing in the halls of international leaders and investors alike as they witness the dragon's fall. The economic slowdown in China has set off alarm bells worldwide. The once roaring Hang Seng Index has now fallen over 20% from its peak, and the Chinese yuan, well, it's hit its lowest level in 16 years, but it doesn't stop there. China's growth has hit a standstill. Consumer prices are falling, a real estate crisis is deepening, and exports are slumping. Major home builders and investment companies are missing payments, causing fears of financial instability to ripple through the global financial landscape. It's a domino effect of economic distress. And the worst part? China's economic future looks bleak, with investment banks downgrading their growth forecasts to below 5%. It appears the dragon might be in for a long, cold winter. China's economic woes are not confined within its borders. As the world's second-largest economy, China's troubles send shockwaves across the globe, reaching far beyond its shores. Asian markets, for instance, are selling off due to rising US bond yields and concerns about China's economic slowdown. It's a ripple effect that's felt across continents. Key economic indicators for China, including house prices, urban investment, industrial production, retail sales, and unemployment, are all exhibiting signs of distress. These are expected to reveal a rather grim state of the Chinese economy. The offshore yuan has fallen, breaching the 7 to the dollar barrier. This has sparked speculation about possible action from the People's Bank of China to prevent further decline. The impact of China's economic slowdown is far-reaching, and the global economy is bracing for the potential fallout. The world's financial markets are intricately interwoven, and a stumble in one can trigger a tumble in another. As the saying goes, when China sneezes, the world catches a cold. The world watches in trepidation as China's economic difficulties threaten to create a domino effect on global markets. Is there a light at the end of the tunnel for China's economy? A question that's been echoing in the minds of many. China's road ahead seems paved with challenges. From a looming population crisis to strained relations with trading partners, the country's future economic growth potential seems to be under threat. One of the most pressing issues is the demographic shift. An aging population means a smaller workforce, potentially slowing down the economic engine that has powered China for decades. On a global scale, strained relations with trading partners could lead to reduced trade, impacting the country's export-driven economy. Moreover, China's high level of debt is another hurdle. It prevents the country from implementing large-scale stimulus measures, similar to those enacted during the global financial crisis. This, combined with the soaring local government debt, poses a significant risk to Chinese banks and hinders the government's ability to stimulate growth. In this context, the economic future of China seems to be hanging in the balance. With these long-term challenges, the road to recovery might not be as smooth as one would hope. The path to recovery looks long and arduous for the Chinese economy, and the world braces for what's to come.